Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we have the pleasure of interviewing Jennifer Shaigec of Sandpiper Trading, also known as Jen Still Many Dots on X. How are you doing today, Jennifer?
I'm great. Thanks. How are you, Daryl?
I am doing well. So, first time on the show, I want you to introduce yourself to the audience and just kind of what is it you do in the space? I know you do a lot of research. I recently heard you speak at the New Orleans Investment Conference and would love to get, your perspective on how do you educate and what else you do in this space.
So I started my career as a trading analyst for a large oil company in Calgary, where their marketing arm no longer exists. But that was, over 20 years ago. So then I had my three children. And when they got older, me in particular, but our family had a really tough time during COVID. And it was interesting to note how many people kind of flocked to the sector and into investing with the ease of things like Robinhood and Wealthsimple around the time of the pandemic. But my mom passed away and I lost my dog. It sounds like a bad country song. But yeah, at that time, it just kind of led me to this world, and I used my mom's inheritance to start a small family fund. And I had a lot of luck with lithium and just took to junior explorers, and there's no alpha like that anywhere else. Mm-hmm. So I love the sector. And, you and I were talking earlier, it's such a small industry too. When you get to know people, it becomes almost like family, and you really learn about the reputations of different management teams. And so that's enabled me to have a lot of success. And I really encourage people to go to conferences. I'm looking forward to attending VRIC and just got back from New Orleans, and they're just incredible experiences that you can gain a lot of information from. And I credit a lot of my success to the connections that I've made and things I've learned from other people. And I love it because there's never a dull moment. Every day is different. There's always new things to learn. So I feel really blessed. So now I run my small family fund, and we just invest in small cap natural resource equities and have done fairly well.
That's good. Well, I appreciate you sharing that part of your story. As even in my experience, COVID was a big wake up call for me in terms of like figuring out what is going on in the world and in our nation. I mean, you're in Canada, I'm in the United States, and really just being able to position myself to be able to protect myself, protect my family, protect my wealth. And that's what inspired me to really travel down this path. And so I appreciate you sharing that. So just thinking about, you're going to be speaking at VRIC. You all be sure to click the link that's pinned in the comments. That is to the Vancouver Resource Investment Conference. So what are some of the things that you were looking at in the junior resource sector? I mean, obviously, gold shot up significantly over the past few months, came down, corrected. There were folks that were coming on the show like Rick Rule and others who said that they were profit taking and that the equities kind of moved too far, too fast. I mean, gold moved up $1,000 in the course of like 3 months, which was a very rapid and aggressive move by the yellow metal. And so what's your overall perspective on where we are in this particular cycle? What are your thoughts on the equities right now?
I have probably a different perspective than a lot of people because I think there's a pretty strong chance that America and China are headed to war. Likely it's over Taiwan, but the tariff battle, et cetera, the trade war right now between Trump and China. So I think this has been a long time coming. I'm of the view that the debasement trade actually started around 2008 with the GFC. And I think when you look at charts and you see that's when central banks started to buy gold after decades of selling, and foreign holdings of U.S. treasuries peaked at that point and have been on the decline ever since. So I really believe in the debasement trade. And I think that when people credit it to BRICS, they think BRICS is largely the force behind it. I think that they're missing a big part of the picture. And if you read central banker speeches and things from the IMF, since 2008. There's a lot more to it, a lot more players involved. So I definitely think that we're headed towards de-dollarization, and I think that conflict, unfortunately, is going to be part of the way that we get there. So in that regard, I'm investing in some defense metals. I really like tungsten. I think rare earths have had enough news, really headline driven, move to that metal or that sector. So I think that people are maybe missing the boat on tungsten. And a lot of the work that I've done indicates that a major geopolitical conflict could happen more along 2027. And it was interesting. I noted that the Defense Act, National Defense Act in the States, January 1st of 2027, they are no longer allowed to import tungsten from any sources in China. China produces over 80% of the world's tungsten. So I think that's definitely a metal people should be looking at. And then as far as precious metals and the whole de-dollarization, I have a bit of a unique theory too that I haven't heard people really mention, and that's I think that we're headed towards something like the IMF special drawing rates, so the basket of currencies, and a bimetallic backing, which the Battle of Bretton Woods in 1944 was between Harry Dexter White from the US and John Maynard Keynes from Britain. And of course, we went with the dollar standard from Harry Dexter White. But had the world gone with John Maynard Keynes' version, called the Bancor, that would have been basically the special drawing rate with a bimetallic backing. And there's a lot in history that would indicate, I think, silver will be part of it. And so I think people are missing maybe that part of the story. It is pure speculation on my part, but just historically and the flexibility of that, I think there's a strong chance.
Yeah. Yeah. I appreciate you sharing that. You all, I didn't know I was engaging with a historian, just looking at how many books are in the background. I got some books here, but I think you got me beat. But just thinking about a couple things a couple threads I want to pull on there. You mentioned that the tariff, escalation between United States and China. I think they signed an agreement that's supposed to go for like a year or something. But it's kind of interesting with that argument being at the Supreme Court, and I'm kind of wondering what kind of ramifications could come out if the Supreme Court does rule that it's unconstitutional. I think it would definitely China would be kind of laughing in the face of Trump in the U.S. in a lot of ways if that were to be the case. And so, do you have any thoughts there? Like, how massive could that be as far as if the Supreme Court were to rule in that direction?
I don't know. That'll be an interesting development for sure. But I think another part that I don't often hear people talking about is the history with Taiwan. Ken Griffin from Citadel, he said that if China were to invade Taiwan, that it would plunge the U.S. into a Great Depression pretty much automatically. So I hear a lot of people say, oh, China hasn't won a war in 100 years. But I think the mentality is very different there. And we tend to look at the world through our perspective and where we live. But if you look at the art of war versus the military industrial complex and how China thinks, they're not going to war constantly like the States. It's more of a profitable thing for the States. And the history with Taiwan, there's a lot of reasons. It's not just about semiconductors. And so I think people are looking at that in more of a recent context. So for me, the tariffs are kind of a secondary thing versus China's historical desire to unify again with Taiwan with the mainland. And I think that'll be the bigger driver more than tariffs.
Okay. So just piggybacking on Taiwan, so you mentioned it's more than just semiconductors. What other factors are at play that could send the United States in a depression? And I know this is the work of someone else that you've studied or researched, and so just want to get your thoughts there.
There's so much right now that frightens me. There's so much risk. And again, I don't really specialize in anything in particular, so I don't want to comment on anything from beyond just a generalist overview. But, you look at things like the Buffett indicator, Schiller PE ratio, and the concentration right now in the stock market is just ridiculous. So I can see between that, Bitcoin, or this whole shift to a new global reserve currency, there's a lot there right now. Even the commercial real estate crisis, it's kind of a matter of which domino will be the first to fall. And there's so much right now that's at stake. That first one could just have this domino effect.
Yeah, yeah, it could be a cascading effect, avalanche, pretty much. So, yeah, I mean, and that's important to note. So, for me, I've read the book *The Fourth Turning* and even the book *End Times* by Peter Turchin, and they both have similar views on a catalyst that's going to change the dynamics here in the United States, and obviously, COVID seemed like it could have been that catalyst, but it wasn't. I mean, it did create some lasting implications. I mean, the Fed came in, printed a lot of money, and then raised interest rates, which caused a lot of pain as well. And now you have like you mentioned, the commercial real estate issues and things of that nature. But I've been kind of thinking about, okay, what is that catalyst that's going to be the one that really rocks the boat? And so, yeah, I appreciate you sharing that. So you mentioned that. Obviously, the de-dollarization, many people are focused on the BRICS, but the IMF and such have also put out some information, publications and such that talks about their agendas or whatnot. And I'm curious, what do you see happening there as far as, obviously, if we have a war with China, the amount of money that's going to be printed to fund the war is going to be significant. And whether this war be, cyber, proxy, whatever the case may be, it's going to cause a significant amount of money printing, and people are expecting that the money printers are going to come back on. I mean, the Fed even just put out some information about ending their quantitative tightening and eventually expanding their balance sheet. And so I just want to get your overall thoughts there on de-dollarization and what does this mean for the metals and the debasement trade?
So one of the things that I discussed in New Orleans was in 2008 when the central banks switched to being net buyers of gold, was because at that point the U.S. debt had become structural. And so in the past, economists have used certain zones for the debt to GDP level, basically, where the danger level increases. And so the fourth quarter of 2008, it was 73%. And now its debt to GDP is 125% in the States. So definitely into dangerous territory there. And I have talked to a number of people that I greatly respect in the industry and had that discussion with them, because I think there's this misconception now about the ability for the Fed to just continue to print. And because of that, the U.S. can remain the dominant power in global reserve currency. But it's destroying the purchasing power of the dollar, and eventually it is hitting the consumer right now. So at what point do you really collapse from that? And that's one of the things too that I was mentioning in New Orleans. If we had a cyber attack or a conflict with China, and like you said, the need to kind of print your way out of that and fund the war efforts, it's different to think that maybe we could just do that. But there's so many other vulnerabilities right now in terms of in World War II. One of the reasons that the Allies won that conflict is that they dominated 70% of critical mineral supply. And now it's the reverse. And people, I often hear them say too about how the U.S. owns the most gold. But one of the things that the IMF seems to be working on with the World Bank and the Bank for International Settlements is these cross-border CBDCs that are going to be by trade corridor. And so it's sort of like there's power in numbers. And I think that's maybe another thing that people need to factor in, is if you start seeing these zones where groups are powered together to overtake the US dollar, it's a lot easier to do so. So one of them Christine Lagarde from the European Central Bank. She often talks about cooperation between, well, basically the Eurozone countries, but they collectively own more gold than the U.S. And so I think there's risk there too that people should consider.
So, listening to your speech in New Orleans, you made the point of America has a debt problem, and then you asked the question, but when does it become a crisis? When does this debt become a crisis? So, for me, I mention the national debt all the time. I mean, right now we're at 38 trillion, approaching 39 trillion. I wonder if the shutdown is going to make that boost up really quick or whatnot. And then, also, you mentioned we have 120%, over 120% debt to GDP. We haven't had this amount of debt to GDP since the wartime in World War II. And so I'm just curious if war is the only catalyst that you think that this can become a crisis, or if there's any other catalyst that could, cause this amount of debt to become a problem.
Mm-hmm. I think there's a number of them. So when your interest cost as a percent of your revenue rises above 20%, in between 20 to 30%, historically that's been an indicator that you're at risk of default. But there's a lot of other things in that picture that could happen. So cyber attack, for one, with a war with China. But this rise of alternative systems that all these countries that are looking at taking down the US dollar as the world's reserve currency, I think that's starting to really eat into things. The holdings of US treasuries have been on the decline. But one of the things I found interesting is that recent BHP deal with China as far as pricing their iron ore in yuan, because that the petrodollar is really what has been a large part of the U.S. being able to remain the world's reserve currency. And so when you start to see countries doing their invoicing payment in an alternative currency like that, I think that puts the dollar at risk. So erosion of credibility is another. With Trump interfering with the Fed, that's another risk. The midterms, there could be a lot of political instability in the states. There's just, it seems like an endless number of things right now. Yeah, it's kind of a scary world.
Yeah, for sure. I mean, you just had me thinking about the most recent election when New York City mayor, elected his first, I guess, self-proclaimed socialist mayor or whatnot. But that showed like a very big pendulum shift and switch. And so I'm curious about the midterms as well coming up. And one thing that me and Jay Martin talk about all the time is like, China plans, they have these 5-10 year plans. In America, we're typically, the U.S. is like every 4 years. And so like you can get a whole new administration that just changes the whole direction of the country and such. And you get these vast amount of shifts. And so it's hard to build and plan around that and everything. And so it's pretty interesting.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Obviously, holding, metals such as gold and silver, they've historically been like the safe haven asset. They're still acting as the safe haven asset now, as it has been for thousands of years. I'm curious in your perspective on equity. So you mentioned tungsten being a opportunity where not as many investors are looking at, but that's going to be a defense wartime critical mineral that's going to be necessary. We do see like the defense stocks have been roaring since Trump has been in office, but even over the since Russia invaded Ukraine. I mean, you have Lockheed Martin, some of the defense ETFs that have been soaring as well. They're up significantly over the past few years, and you have all of these Trump has changed the Department of Defense to the Department of War, and all of these different things where it's like, okay, well, defense spending is going to increase. We even saw when Elon Musk and Doge came in, they wouldn't touch defense, right? And so, I'm just curious there if there's, any other opportunities in the defense minerals, and then if you have any perspective on the gold and precious metals equities, I'd love to hear your thoughts there.
Did you want actual names?
If you want to get some names, that would be cool. Not financial advice, but I think
exactly.
The audience would love that.
Well, I like Fireweed Zinc, of course, for tungsten, and they've got lead, zinc, rare earths. So things like that. The top 8 defense metals I've looked at. Antimony is another one that is of interest to me. Copper is actually number 1, and copper's been kind of my favorite metal for the last several years. So I think people should definitely be looking into copper stocks. There's so many reasons to be bullish on copper. Even if we do enter into a recession, hopefully it won't be a depression. But I think as far as the supply side for copper, there's certainly enough reasons that people should be looking at it. Trying to think what else. Like I said, I wouldn't really touch rare earths myself right now. One question that Rick asked on his panel was a black swan for the sector. And I worry a lot about nationalization of mines. So that's one thing I'm going to be watching fairly closely. I'm concerned with governments taking large equity stakes in some of these mining companies. To me, that's a little bit of an early warning sign. And maybe I have a bit of extra paranoia in that regard because I'm an Albertan. And so we're still, I think there's still a lot of bitterness in our province over the National Energy Program. Back, I think it was 1980 from Pierre Elliott Trudeau. And so I think that's something people really need to keep their eye on as well and be cautious. One of my favorite papers that I often bring up with people, I'm sure you're familiar with Go Rosen, the natural resources investment firm. I'm a big fan of their work. And they issued in 2022, there was a paper that they wrote about commodity supercycle. And they did a lot of research into this, that every time we've had a significant crash in history where commodities have been somewhat undervalued like they are today, that the best allocation for your portfolio would be to put 25% each in agriculture, energy, precious metals, and base metals. And I really think that's a great way to position yourself right now. There's so much money in speculative assets and tech stocks that if we get a crash and if there's a conflict and people rotate into hard assets, I think that's a great allocation.
Got it. Okay. And then if you have any names on the precious metal side, be curious in what you think there.
So I'm a big fan of the risk reward potential in this sector. But I really, every time I look at a company, very first go-to is to check management's history. And I will not invest in anyone unless they've rewarded shareholders well at least twice. So I love the Lundin family, pretty much anything that they're doing. One of my favorite stocks right now is Faraday Copper. That's the Lundins, Pierre Lassonde, and Murray Edwards. And I don't know about you, but I've never seen those 3 names together in one company before. So that to me speaks volumes. And then an interesting one that I hold right now, and I'm very cautious about all of the exploration companies, and I tend to allocate or position according to their experience and the success that they have brought to people in the past. But one of the ones that is fascinating to me is in Armenia. I think strategically, it's very interesting area. I know Rick Rule has said that some of the next major discoveries are going to be in the Tethyan Belt, and it's Hyasa Metals is in Armenia, and that's actually I think they have the second largest U.S. embassy in the world, and I think it could be a very interesting country to watch if there is a global conflict. They're actually Trump brokered this peace agreement between Azerbaijan and Armenia. So yeah, that's one to watch. And I still really like Chile and Peru. Peru has an election coming up in April. And what's interesting about this one, because Peru has always been somewhat chaotic. I think they had something like 8 presidents in 5 years. But
Wow.
their election system has changed. And so this election coming up in April, they're going to have a lot more difficult time ousting a president. So hopefully that'll bring some stability to the country. And there in Peru, I also find, same with Chile and Argentina, it's a lot about local risk. And so I'm pretty careful to do my due diligence on that. So one company, my favorite actually is Camino Minerals. And one of the reasons I like them is because they have 4 different assets, 3 of which are in Peru. One is in Chile, but that one is, the one in Chile is construction ready asset. And so you've got exploration upside in Peru and then construction ready in Chile. So you'll have a producing asset to fund some of the exploration. They're partnered with a major from Japan, Nititsu. So I really like that one.
Okay. Yeah. Thanks. Thanks for sharing some of those insights there. So earlier you mentioned that silver could be a critical part of this, return to hard money. Obviously, silver was added to the critical minerals list, and you have this increase in demand from industrial usage, and then we also have the deficit from mine supply from the recent years. And so I'm curious in your perspective on silver, and then also, even thinking about your speech at New Orleans, you spoke about China, and their relationship with silver and such. And so just want to get your overall take on silver.
So historically, across the globe, silver really has been the foundation for the global monetary system. And one of the things I mentioned too, India loves silver. The word rupee is translated as wrought silver. So it was really only up until 1935 when China was the last major country to leave the silver standard that silver's role in the global economy sort of ended. And that's another thing I think we often just look at our own country in recent history, but there's a lot of reasons that I think silver could once again play a larger role. One of the quotes that I gave in my presentation was from the People's Bank of China, where the governor there had mentioned that an international reserve currency should be anchored to a stable benchmark, but that the supply should be flexible. And that's one thing the gold standard or a gold-backed currency would not be. And so I think he was, and this is again me just speculating, but there's enough of those little details for me that I find silver could potentially play a large role in the future. And the IMF, I mentioned too in my presentation, there's this gentleman, Johannes Weigand, and he's based in Shanghai, and he's written several papers regarding the bimetallic backing or standard. And I think it would serve people well to read some of his work for the IMF and discussing why that could potentially be a good fit in the future. It would bring that flexibility. So it's beyond for me industrial use, which also these days, as you said, certainly has changed the picture for silver quite a bit. But I'm curious to see. I really think that we are headed towards a bimetallic backed SDR. And another interesting item there that I've discussed with people that they weren't aware of is in the Islamic faith, in the Quran, actually, the bimetallic standard or backing is their most acceptable form of money, not fiat, not crypto, not just a gold standard or gold backed. It would be bimetallic for a number of reasons. So I
Yeah.
think that's another thing that we need to consider, because we could see this trade by corridor or currency by corridor, and it would have to be acceptable to a large percent of the global population. And so that's another thing to consider.
Yeah, yeah, for sure. Yeah, that's pretty interesting. I mean, even in other big faiths, like the Christian faith, Jesus being portrayed by 30 shekels of silver. Like it's like I kind of wonder, like, why wasn't it gold? Like
Yeah,
and so I think
exactly.
about that.
Yeah.
Okay, so do you have any ideas of how high silver and gold could go? As these dynamics play out. Obviously, you don't have to give a price target, but if you have any idea of what you're thinking. I know triple digit silver has been constantly discussed on this channel, and at first I was thinking, like, these folks are crazy. Like, silver's not going to go to triple digits, but I've only been in since 2020, right? And so you have folks that have been in this industry way longer than me, have a lot more knowledge than me, and they're proving their case, right? And you see silver's recent performance, you're like, okay, yeah, this is definitely possible. And so, curious in your perspective on where you could see silver at and where you could see gold at as these dynamics play out.
So I was of a similar view to you. When I heard Pierre Lassonde, who I would probably trust more than anybody to come up with an estimate for gold, he said 20,000. And I thought, you know what, I could see that. What I've been looking at now in terms of if there was a switch to this bimetallic backed cross-border CBDC, the calculations that I came up with were 10 to 20,000 for gold, and about $300 to $700 an ounce for silver.
Wow. Yeah. If it's $700 an ounce, I'm gonna be one happy man. It's also kind of, for me, like, I kind of think about what role is silver going to play in my my own kind of financial journey. I mean, obviously, gold is I view it as the insurance, and many folks view silver as speculative. But obviously, if history rhymes and countries begin to back their currencies by gold and silver, then that's going to play like a different role. It's going to kind of change the dynamic a little bit, to become less speculation and more like, okay, this is hard money that we may need to hold for insurance as well. And so I've been kind of thinking about, like, okay, when will I sell my physical silver, or is it going to be triple digits and I'll sell it or whatnot. But I still hold like the constitutional silver, like the dimes, the pre-1964 dimes, and all of that type of stuff for junk silver for like barterability and such. But yeah, I mean, my views are kind of constantly being shaped when I hear these numbers and hear these facts, and so I appreciate you sharing that.
Thank you. One of the things I've been showing to people too, I did up a graphic, because Rick Rule, he always talks about the purchasing power of the dollar declining. And myself, I'm a visual learner, and I think a lot of people are. And so I did up a couple of graphics to show people what he meant by that. And I showed what $35 US would have bought you in 1944, and equivalent to an ounce of gold at that time. And now, if you were to look at that in today's $35 versus what an ounce of gold would get you, it's quite striking, because $35 is what, one night out at the movies, whereas an ounce of gold, right, $4,000. You can get new iPhones, set of golf clubs, all kinds of things, right? And so I think people really need to recognize that whole store of value concept and why it's so important. And because my sister was asking me too about buying some physical metals, and I suggested to her silver, but the poor man's gold, basically. In the future, if you actually did need to trade that in and use it, it might be a little easier to do so. But I told her it's all about the store of value. You can pass that down to your grandkids one day. I don't view it as trading. And since I've been stacking some metals, I can actually sleep better at night, just knowing that yeah, my wealth is safe versus, like Rick says, with the purchasing power of the dollar declining, it's frightening. You go to the grocery store and what groceries cost now, I don't know how people can afford life anymore. The middle class is just being devastated.
Yeah, yeah, for sure. Yeah, and that's pretty traumatic. Just thinking about $35 can barely. I think it barely gets you a night out at the movies. I mean, you got to pay $10 for a box of Milk Duds and
Yeah.
another $10 for a box of Sour Patch Kids, and then you still got to get the tickets and the popcorn. I think you're gonna end up spending like 50, $60 easy, but but
Yeah,
it's
exactly.
definitely the dollar don't hold as much weight as it used to. So I'm curious in your strategy as we get ready to wrap up. Your strategy on how are you positioning yourself now? I mean, obviously, you mentioned you continue to stack metals, but obviously, if you want like the leverage and you want to increase your money fivefold, tenfold, whatever the case may be, it's going towards the equities. Like looking at the equities is important for that. So, how much are you like positioning yourself in metals versus like the equities? And at some point, do you feel like you will have enough like physical metals and like you're going to go majority equities, vice versa? How are you managing that risk and all of that? I'm curious in your strategies.
In the case of my fund, it's a little bit different versus me personally. I think it just is really dependent on your own personal risk tolerance and situation. I really, as I said, I like that go Rosen split. Doesn't mean I've actually done it because I am partial to exploration companies, and I feel like that's kind of my niche, and I've been able to have enough success there that I feel comfortable sticking in my zone. But the thing that I've been trying to tell people, and again, not financial advice, but if the world is headed the way that I think it might be, I think it's really important to spread that risk around as much as possible because there's always anything that's happened in history, I believe can happen again. And so people that are looking to hold a lot in physical, I'd be concerned about confiscation of metals. That's happened in the past. I see no reason why it wouldn't happen again. Same with nationalization of mines. If you're holding Canadian energy stocks, another version of the NEP, there's so much risk. And then even for people to think they are safe going to cash, if it's, unless it's in your possession and we have a cyber attack, your bank account is at risk. And then holding cash, like we were discussing with the decreasing purchasing power of your dollar, there's just risk in every area right now. And so I would caution people to spread that around as much as possible.
Mm-hmm. Yeah. Yeah. Thanks for sharing that. Yeah. I've actually been thinking about, the metals in my house and how to spread that out. And so I've been looking into some of the retirement accounts for gold and silver, as well as some of the vaults out of state, and even looking at the idea of tokenized gold and such. And so I've been kind of thinking about that. I'm curious if you have any thoughts on tokenized gold. And then as we wrap up, we'd love to hear your thoughts on Bitcoin's role in all of this, because it's been, there's been a lot of narrative around it, and so I'm just curious in your thoughts.
I'm really, I'm not touching anything like that myself. I've read the Genius Act, and I won't profess to understand the technology that, like digital ledger technology, etc. But I think that people that are talking about Bitcoin in particular will likely live to regret that. I think it's going to be a stable coin future. And you look at some of the things in the Genius Act, and the states has actually prohibited the establishment of a central bank digital currency. And I think that that's the way that we're headed, is going to be this stable coin with some kind of, like you said, gold backed. But there's just so much uncertainty as to how that's all going to play out, who will be behind it, that I personally don't want to touch it right now. And I was tweeting the other day about who exactly is behind Bitcoin. And I don't know how many people actually know that. And to me, it's the equivalent of investing in a company without knowing who management is, because these nodes for Bitcoin mining, and you can correct me here, like I said, I don't really confess to know a whole lot about the technology, but over 63% of them are unknown and unreachable. It's over 10% are in the US. And I'd feel a lot more comfortable if it were the other way around. But not knowing who's behind it, I'm really concerned in the money laundering that goes on. And it's interesting when you read these central banker speeches. Mark Carney, for some time, has said that Bitcoin is all about the greater fool theory. And they've all said, all of these central bankers have discussed how the technology has been proven now, and it's been wonderful in that regard. But when it comes to a cross-border CBDC, it's going to be all about that technology, not Bitcoin itself.
Mm-hmm. Yeah. Thanks for sharing that. And I'm curious how this all would play out as well. Especially just thinking about the the stable coins and the Genius Act and such. And I think that there's a lot of concern there for many people, and especially it potentially being a Trojan horse for control. And when you think about, like, I never really thought about who's behind Bitcoin. Obviously, you got the Satoshi Nakamoto alias or whatnot. But, behind gold and silver, I believe is God behind it. Some people may argue evolution. It could be both. But, it's a lot different than, a man creating it. And so, yeah, for sure. Okay, well, I appreciate you for coming on. Where can people connect with you, find out more about what you're up to, also connect with your services and such? Plug the audience.
Thank you for asking that. I don't monetize anything really that I do right now. I just do it because I love it. And people want to talk with me on Twitter, they can reach me at Jen Stowe Many Dots. Just look up Jenny Many Dots. But make sure it has the blue check mark, because otherwise there's a lot of bots on there and impersonators. But that's usually the easiest way to reach me. And then my website is under construction right now. I have one analyst that's working with me, and we're working on some things that I think eventually I will have subscribers if they're interested, maybe a newsletter. But at this point, everything I do is still for me very much a learning experience and for the enjoyment of it. So I love to talk to people. Anytime people want to discuss any of these things, feel free to reach out on Twitter.
Okay, sounds good. Thank you for plugging the audience, and then hopefully, maybe you'll be up and running by the time the conference comes around in January. We'll
I
see.
hope so.
But appreciate you for coming on. You all be sure to hit the subscribe button. Love to have your support. Also, again, click the link that's pinned in the comments. That is to the Vancouver Resource Investment Conference, where I will be there live in person. Jay Martin will be there live in person. We have Jennifer who will be there with us as well, and so we would love to engage with you in person. So look forward to seeing you all. And until next time, thank you, Jennifer.
Thank you, Daryl. Appreciate it.